Hello everyone, good morning. Hello everyone, good morning. So let me welcome us to another exciting morning market review again. This is Rally Trade Morning Market Review. So this is a session we normally have every day, Monday to Friday. So what we'll do is to analyze the market. Now, of course, point you in the area the market sees has higher probability, higher potential of going. So that at the end of the day, you can be able to make good profit for yourself. So once again, my name is Emmanuel Doku. I want to believe you guys can hear me, but let me do a sound check right now. Please, if you can hear me, just go straight to the chat room and indicate if you can hear me. Just maybe you can just type, I can hear you. I can hear you, Dogu. Just do that, please. Let me see if you can hear. Okay, fine. That's cool. You guys can hear me, so we're on the same page. So I think we have good numbers in the room right now, so we are good to go. Okay, I can see all of you. You can hear me. The guy said I should come to you. Oh my God. Once again, okay, please just hold on for 1 sec. Let me just do something quick here. So just always do try to look at the fundamental events we have for the day, because the major mover of the market or the major thing that moves the market is the fundamental, right? So you don't want to joke with your fundamentals. In fact, most persons call themselves fundamental traders because they wait until there is a fundamental event before they can trade, right? But for we trade all of it. We trade technical analysis, we trade fundamental, right? So you don't only wait for fundamental. But fundamental is the major mover of the market. So as a trader, you want to always keep an eye peeled on fundamental events. So there are several websites you can do that. One of them is investing.com. So if you're new here, if this is the first time you're joining us, there's a website we traders normally use called investing.com. You can equally use tradingeconomics.com, fs3.com, myfacebook.com, several of them, and then the most popular one of them all common now. That's the forestfactory.com. So guys, any of this website in the morning, you can just check any of this website for your fundamentals. So it is okay. I think I can see one of you trying to crack me up this morning. He said, please accept the concept of go big or go home. Is it applicable to forex trading? Oh my God. The answer is yes. So you either go big or go home. All right, quickly. Let's do fundamental analysis real quick. Okay, so I will share my screen right now. So just give me 1 sec. I will share my screen with you. So like what I normally do is I like to view the events for the whole of. I like to view the event for the whole of the week. That will really help. Okay, so that you can prepare yourself. So just in case there is no news in a particular day, so that you can know that because of there's no fundamental, there's no high impact fundamental news on that day. That's why the market is not moving very well. So perhaps you can wait until the next day or the next 2 days when there is a high impact news, right? So if you place a trade with your technical analysis, most times it is the fundamental events that comes to drive the market, okay? So let me share my screen real quick so that we can do this very fast. Remember, this is a 1 hour analysis session, 1 solid hour of market analysis where we get to give you tips, tricks on how to navigate the market, okay? So let me do, so I've been able to share my screen. Please indicate if you can see my screen. So this is Forex Factory, right? Forex Factory has the adverts here, the discussions here are quite almost not there. So that's why we like to use this one, okay? Very good for newbies. So if you can see my screen, please indicate this is just Forex Factory. You just type FF on the chat room. Forex Factory, you can see my screen, guys. You can see my screen. So let me go ahead and assume you guys can see my screen. So I'll move with just speed right now. Okay, you can see my screen. So this is for Monday, right? So Monday was yesterday. There is no high impact news, even though we have medium impact. So for those who are joining us for the first time, this is forexfactory.com. So the left-hand side here is the date of the news, time of the date news will be reduced. Currency, the news will affect the volatility of the news. Volatility is the rate of change of price with time. So that means this is what actually attracts us to trading any instrument. So we want to trade where the market can move very well, okay? And that movement is what generates the money for us, okay? All right. So the red ones are the high impact news. For those who are joining for the first time, the high impact news. Then of course the yellow ones are the low impact news. Then of course we have the caption of the news, and we have the detail of the news. We have the data of the news. So actual here is actually the results. So a very simple way to get through with this is the actual in green color, good for the currency. You want to buy the currency, actual red, but okay, so you already understand that. So quickly, for today, we have the news by 2:30 p.m., right? So that news is on USD, and that's on durable boost. Then, of course, so that means we're expecting some kind of movement, right, on the US dollar, okay? So when I to trade the news, you wait until 2:30 p.m., right? Okay, so by also 4, we have another news on USD. Now, I'm so much loving this. There is news on USD because USD needs to recover some of the losses, right? Like it has encountered these few days, right? So most of this news will just come out good for the dollar so that the dollar can recover. For example, if you look at JP USD, Euro USD, right? They have been beating the dollar hands down. So I think we need some positive news for the dollar so that the dollar can come back to life. Okay, so if you have some trade already on that, and of course, let's say you're bullish on the dollar and and your trade has been negative, you just want to apply some patience, right? Because this news might just go in your favor, right? So it's not really advisable that you close a negative trade and then, of course, within the next few hours, that particular trade now moves in your direction. So painful, some people, really very painful. All right, then. So with the news we just have just for 2:30 and of course for 4, okay? So we hope that that news is going to pump in some kind of energy, some kind of momentum into the dollar, okay? Since most of our trade has a lot to do with the dollar. So on Wednesday, we have a lot of red news, okay? So for want of time, I will just go straight to my chart so that we can look at market structure analysis, guys. So the kind of analysis we do on the chart is called, it's a market structure analysis. So, and the easiest way to understand market structure for those who are joining for the first time, we try to look at the highs and the lows, right? So our emphasis is more on the highs and the lows. So if the market keep breaking the highs, we call that the break of structure going to the upside. So that's what we call upward trend, right? The market keep trading above the highs. Now, if the market keep trading above the high, it means the bulls or the buy side has more momentum, okay? The bulls or the buy side has more momentum. I mean, those that are increasingly placing buy trade are actually controlling the market. That's what it means. So we call that upward trend. So for you as a trader, when you see the highs keep getting higher, it means you want to look out for a buy trade, right? So you want to look out for an area of interest, right? That you can actually place the buy. And usually that area of interest is to be the area of highest demand. And the area of highest demand, right, on an upward trend is what we call the support, right? It's popularly called the support, right? Then, of course, if the market keep breaking below the lows, right, the established low, let's say the low of yesterday, today's low broke the low of yesterday, or today's low broke the low of last week, right? So that suggests a downward momentum, okay? So, and of course, don't forget the market breaking the low, we call that a break of structure to the downside. Okay. So what you have to do is you have to look for a sell opportunity, right? And that sell opportunity usually at the area of interest, right? And usually the area of interest for a downward trend is usually what we call the resistance zone. Please, I don't know if you guys are following me. So let me, yeah, I know. I've not showed the chart. I was just explaining something to you guys, okay? All right, so let me show my chart right now. I hope you were able to get some value from that. That was kind of a rant, but then there was a lot of value in it. So let me share my screen real quick with you guys. Okay, so that's my screen there. So right, you guys can see my chart, right? Chart. All right, so let's start from USD index, right? So the dollar index. Analyzing dollar index is very, very important because most of us will trade the dollar. Okay, so let's look at the dollar index. So if you look carefully, you will notice this H4 time frame. We can call this a downward trend. Why so? It's just what I just explained to you guys. The market keep breaking below the lows, right? So this price took out this low, this price, this low took out this low, right? This low took out this low. So anytime the market is taking out the low, we call that break of structure to the downside. So break of structure to the downside is what we call is what we mean by a downward momentum. Okay. So how do you know downward momentum? The market keep breaking structures to the downside. By breaking structure, the lows and the highs are actually what we call structure. Okay. So don't let that word structure sound so big to you. It's just the market keep breaking below the lows. So as you can see here, the market keep breaking below the lows. So we can say this instrument has been trading down, and that's the USD index, right? But for those of us that like trading candlestick pattern, right? So you can say after this candlestick here, right, which is having a bullish preference, right? So now it's actually a bearish candlestick. But if you look at it carefully with your third eye, so is there something called third eye in trading? Of course. You see beyond the chart. So if you look at this candlestick properly, you notice it's a bearish candlestick, but it has a very long wick just below it, right? So that long wick below it is what we call bullish preference, right? So it's a bearish candlestick, but carrying a bullish preference, and that bullish preference was able to manifest on the next candlestick. So I'm trying to say the bulls are somewhere around the corner. That's just what I'm trying to say, okay? So even though this market is heading downward, the bulls are somewhere around the corner, right? So they are looking for the perfect time to push this instrument to the upside. So what I did, and knowing that the bulls are around the corner, I hope you guys are still following. What I did, knowing that the bulls are around the corner, I just used my Fibonacci retracement tool. So I drew from that low, extended to this high, right? From that low to this high, right? So as you can see, the market is testing my 61.8 level, right? So the market is testing the 61.8 level. And of course, 61.8 level is a golden ratio, right? So most of the time, that level will usually serve as what we call a demand zone, right? A demand zone. So as you can see carefully, it tested it the first time, it left it with a bullish pin bar, right? And bullish pin bar is a sign of the bulls still coming in, right? So the bulls are actually coming in. The bulls, we're expecting the bulls on the US dollar. I can tell you that. Now, see, if you're having a negative trade, because most people have negative trade, and what they do is they nurse the negative trade. They nurse it, right? So if you're having a negative trade and you're bullish on the dollar, right? And the dollar has been going down. So it means you may want to exercise patience. I said that earlier. You want to exercise a little patience, right? Because I can tell you this, the bulls are coming in, right? So we have this level, right? So actually we have this level. So you may just want to wait for this level to be so the market may just observe this level, right? The market may just observe the level, or that level may just hold the price, right? So it means we may just be expecting the dollar to be a little bit strengthened, a little bit bullish for today, right? Later part of the day, not right now, okay? So later part of the day. So most time when we analyze, that analysis happens maybe later part of the day. Now, this analysis is usually in the morning, 8 a.m. to 9 a.m. But most times the analysis normally plays out later part. So what you want to do is you want to really pay close attention to your chart, right? And of course, you know, this analysis we are doing is on Zoom, but we are recording it, we are live streaming it on also on YouTube. I'm also recording it on YouTube. So it means on your own, you can always go back to YouTube later on and watch the video again. Remember, this type of knowledge comes by hearing and hearing, okay? So you can go back to YouTube and watch it again, right? So I've just mentioned here that we're expecting a the bullishness of the dollar later part of the day because we are seeing that the dollar may just be strengthening. And of course, don't forget, we have news on the dollar for today. So I think Ransom, I can see you there. Thank you very much. Means you guys are following, okay? Even though I'm trying to talk very fast so that no, we just have 1 hour for this. Okay, so we have seen this, but if you look at what is happening to the market right now, right, we have the price really going down, right? So let me zoom into the area very well. So you can see that it is actually nosediving, right? Still going down. So those of us stay on a sell, right? On let's say perhaps on a buy on any of the USD denominated currency pair like the GP USD, Euro USD, AD USD. So you can still be basking on your profit. I can tell you that. And of course, you may just you don't want to hold that trade for a long time. Okay. Now let's switch over to Euro USD, GP USD so that we can look at trades to take. Okay.
Hi, Carol.
Somebody saying it, Carol, yeah. All right, so let's look at Euro USD quickly. So this is just what I was saying, right? So all of the USD denominated currency pair, right? I mean any of the currency pair that has USD as the quoting currency. That's the meaning of USD denominated currency pair, okay? So currency pairs such as Euro USD, GP USD, NZD USD, AUD USD. So those currency pair will be seeing their way or will be having their way or will be trading their way to the upside right now, right? So for example, Euro USD, as you can see, it has actually pumped up today, right? That's pumped up. But if you look carefully, let me look at it on the H4 time frame real quick. So on the H4 time frame, this instrument is actually trading to the upside, right? Trading to the upside. So that means those of you that have been buying it, you have been really basking in good profit, right? So those of you expecting a retracement, most persons prefer to be bullish on the dollar, no matter what is happening to the dollar. So most times you make profit, so most times you have to nurse your negative, right? Now, but for those of you nursing your negative right now, there is a hope for you, right? So there is a hope just blocking around the corner. No, there is a hope for a tree if it be cut down. So there is a hope for you if you're bullish on the dollar, and of course you are still expecting it to turn. There is hope for you. So let's look at H1 time frame. So on the H1 time frame, you can see that the market is trying to rock a previous resistance, right? So let me just draw this real quick for you. So the market is trying to rock a previous resistance, as you can see there, right? So if the market is rocking a previous resistance, it means it may just be difficult for the market to break through that resistance, right? So let's see what will happen. So let's see what the market will do for us. Okay, so the only way you can continue buying this instrument, because we're already seeing bullish momentum, the only way you can continue buying this instrument is when there is a break above the double high. Okay, so the market has given us a double top there. So if there is a break above it, that's when you can consider buying it. So something like this. So we expect, so if market breaks above it, that's the only way you can buy it. But right now, I would encourage you to buy. So I wouldn't want you to buy. So if the market breaks above it like that, then of course, usually it will do what we call a retracement, right? So it will retrace to the downside. So if we see something that looks close to something like this, then we would like to buy. Okay, we like to buy. So if the market does something like this, then I can tell you we would like to buy, right? So when I will buy, where are we going to buy? So we're going to buy just above this resistance. So anywhere around 1.08650. So take note, we're not buying immediately. So we are buying if the market can trade and if the market can show us something that looks like this into 1.08650, right? But for me, I would like to still be very, very bearish on the dollar. So perhaps the dollar is trying to give us a premium price before it can dump. Remember, you have to sell. The market normally does what sell to buy. Okay, if it wants to go down, it first goes up, right? Before it goes down. So perhaps that's what the market is trying to do. So take note. You may want to write it down. If for a day the market wants to go perhaps down, so most often than not, it goes up first before going down. So why so? The reason so is have to go up to gather enough momentum, right? And now moving upward is what we call premium price. So the market has to offer the premium price first before it will dump. So if the market if a day is going to be a bullish day, the market will have to give discount first before it goes bullish. By discount, I mean the market will have to trade lower so that it can gather more momentum. By momentum, I mean it can gather more buys. Okay, before it can go up. So in the same way, if the market, if a day is going to be a bearish day, I don't know what I'm making sense here, but please listen carefully. If a day is going to be a bearish day, the market will have to offer the sell side first. I mean, the market will have to offer premium prices. So premium prices are high prices, okay? Premium prices, don't forget, are high prices, okay? So that means also the market will have to trade upward, gather more sales before it can now dump, okay? It made some sense there, right? Okay, so it means for today, if the market can break this resistance, for those of us doing scalping, if the market can break this resistance, as you can see, it's already tapped into it.
No. I don't use that of the stick.
So as you can see, the market is already trying to tap into it. So if it can tap into it very well, so wait for a retracement before we can take it up again. Okay. Now, but for those of us still looking at for sell condition, you may still hold your trade, right? So if you're still on a sell trade, you may still hold your trade. You may still hold it. You may still hold it because we're expecting some miracles on the dollar today. Okay. Now, for a sell condition, for a conservative entry, remember this is the open of the market for today. Let me point to you the open. So this is the open. So this is where it actually opens. So the market opens here, right? So the market actually opens here, right? So that means it has already given some, it has already traded lower, right? So these are the Asian low, right? So remember this Asian low, the market will be coming hunting for it, right? So it means if the market has created some Asian low, we're expecting it to maybe perhaps trade downward. So if the market breaks through that Asian low, that is when I would love it to start selling. So for a sell condition will be anywhere around 1.08460. So 1.08460, right? For those who are very aggressive, depending on what the market shows us. So anywhere around there, the market can even print what we call a change of character. Okay, so change of character is when the market starts. Now, on an upward trend, the market suddenly start printing lower lows. So we call that a change of character. So if the market start printing lower low on an upward trend, we call that a change of character. So you want to write it down, okay? Change of character is when the market start printing lower lows on an upward trend. So once you see the first lower low, and of course the second lower low, then you want to start selling. So that gives you an opportunity to start selling at a premium price, right? At a premium price. So which is even best to make profit very early. So there's a lot of questions here. So you're asking if this rule holds for all currency? Yes, the answer is yes, it holds for all currency. Let me go to some of the questions, right? Audio is clear, audio is not very, audio is clear, or others are hearing me now. All right, so I've given you the two scenarios so that you can be able to place it. So this other one is buy stop, right? So the first one I gave you was buy stop. This other one is sell stop, okay? Now let's look at GBP USD. So for GPUSD, guys, let's look at what the instrument is trying to do for us here. So also this instrument has been kind of bullish, right? Really very strong, going up, as you can see. Now, if you look at this instrument carefully, you notice it has created for us several highs, right? So it has created for us several highs. So that means the bears are locking around the corner. As you can see, it created these highs. We call that. Now, this is a bullish market, right? So if you see this long wick just above, so we call that a bearish tendency, right? So we already started seeing some bearish tendency. So bearish tendency are the first sign that you can notice that show that the market is about to experience a bend. So somebody would say, Emmanuel, does this market actually bend? Of course, the answer is yes. Now we say a trend is your friend until it bends at the end. A trend is your friend until it bends at the end. It means the trend can also bend. So that means this is an upward trend, as you can see, breaking structure to the upside, right? Breaking structure to the upside, but we are already seeing some bearish tendency. So this software I have here is actually painting it for me. So this is actually a big bearish tendency, yes, but the market is actually rocking it, right? So we're having a talk of war inside there. So inside this area, we may likely see a turn, right? So, but for now, the market is purely bullish, okay? So it's very important for you to take notes. So all of these are bearish tendencies. So if you like, this can be said to be first top, second top, the third top. So the market is rocking the tops, right? The market is actually rocking the tops. Okay, so let me dive to much lower time frame so that we can look for opportunities there. So where are the opportunities here? So actually, this market has gotten to what we call a resistance zone, as you can see, right? So I will not be an advocate for a buy there since the market is actually rocking a resistance, right? So what I'll do is I'll only look for opportunities to sell, right? So I'm not selling immediately. So I'll sell when the market starts printing what we call lower low. So this is M30 30 minutes time frame. So where do I look for the lower lows? I can just drop down to maybe 5 minutes time frame. So if the market start printing lower low, I will start selling because the market is rocking. So just imagine this, what happened here. So I've been able to zoom in, okay? It's bigger now, right? Okay, so just imagine what happened. Where is it now? So just imagine what happened here. So the market. So the market got to this high. Just imagine this high. The market got to this high, but upon reaching this high, right, there was already an established high there, right? As you can see, there's already an established high. And now I'm explaining this going forward so that you can be able to use this to make a profit subsequently, right? So the market has already established this high. So the next time you go to that high, look at what happened, right? So most persons were looking forward to buy here. And of course, after seeing this big bullish candlestick, as you can see this, that traded right into this high, right? So most persons will be looking at buying. So in fact, there are a lot of new traders. There were a lot of traders that actually placed a buy here, expecting the market to pump more into this area. But guess what? Being that the market has gotten to a resistance zone, what we call a supply zone, right? So you don't buy. So what you do is you look out for an opportunity to sell. So is it possible to look out for opportunity to sell right inside this area? The answer is yes. So if I'm to zoom into the area, you can see that there was an opportunity to sell, right? There was an opportunity to sell. I mean, the market traded, it gave all this high and printed for what we call a bearish preference, right? Now, this bearish preference, this long wick here, if you go down to a much lower time frame, say 5 minutes time frame, this wick here are bearish candlestick, right? This wick is a bearish candlestick, right? So it means the market actually traded up bullish candlestick and so they trading downward, right? So and of course, this is an upward trend. So if you're seeing the market printing for you lower lows, right? Because it traded downward, lower lows. And that is when the market is trying to tell you that it's about to go down, okay? Okay, actually the market went down this much, traded back into that area. The same thing happened here. This long candlestick you're seeing right here, it means that the market started printing lower lows. Okay, and that's what we call change of character. So the sell can begin anywhere around there, and of course, start making your profit going downward. So in the same way, sir, in the same way, this market normally prints for us. It normally normally repeats what has happened in the past, right? So now, if you watch carefully, the market did the same thing here, moved down, did the same thing here. So there's a higher probability that the market might equally do the same thing here, okay? So the only reason why you have to buy, in fact, buying anywhere here is a high risk trade, okay? It's a high risk trade. And remember, there are two ways you can trade. You can trade with high risk or low risk. My pattern or this analysis borders around low risk trading, right? Most traders need to trade with low risk trade, okay? Because inside the money they are trading with, there is a lot of things inside that money. There's a lot of things. For most persons, there is school fees inside that money. There is house rent. There is so many things. So because of there is so many items, right, inside the money you're using to trade, the best method you can trade with is the low risk trading, okay? And low risk trading is what I'm explaining to you, okay? So high risk trading is buying anywhere yet. So you have seen a very long candlestick pumping upward. You're going to buy. That's high risk. So you can actually make profit with high risk trading, sir. Yeah, you can make profit with high risk trading, okay? Now for those of you high risk takers. Now, for those of us high risk takers, so let me give you where you may possibly want to continue buying, right? So if the market can break above these highs, so these recent highs, right? These recent highs, take note, this high, so this is Monday, this is Tuesday, right? So if the market can break above this high, then you may want to start buying, okay? So because this high may just end up being the high of the week, right? So that is why this high it's a may, right? It's not a possibility. Okay, so but you anticipate these things, right? You anticipate it because now, the highs and the lows the market creates every day. We have 5 trading days in a week. The highs and the lows the market creates every day. One of such high and low end up becoming the high of the week, right? Take note, please. Every day the market creates highs and lows, right? Daily, right? 5 days in a week, highs and low. One of those highs and low for those days will end up becoming the high of the week, okay? So you want to wait until this high is taken out, right? You want to wait until this high is taken out before you can buy, okay? So that means you wait until the market clearly breaks above the high. So let me just give you the price very fast. I think time is really running very fast here. Yeah. We're trying to give some value and the time is just against it. So 1.26993, 1.26993. So you want to use a buy stop anywhere above 1.26. Okay, okay, let's just make it very even, right? Let's make it even, please. 1.27000, 1.27000. Let's use this other one, please. So if you watch and the market have traded above 1.27 GBUSD, please. The market have traded above. If the market trades above 1.27000, it means the high of yesterday being Monday has been taken out, right? And if the high of yesterday being Monday has been taken out, that high can never ever become the high of the week again. So it means now we have a potential high of the week, which becomes the Tuesday high. Okay, so that's that's how you trade. Okay, then of course. Don't remember, we are still looking out for bearish conditions. Yeah. So if the market fails to break above this high, then of course we have to be going bearish. Okay. So if I'm to zoom much more into this area and drop down to a 5 minutes time frame, we should be able to see some bearish signal trying to pump in. As you can see, that's created for the first red candle, trying to print for the second red candle. Okay. All right, guys. Now the next one, let's look at gold real quick. Gold is trading to the heavens, as you can see, has been pumping upward. Okay, let me look at some of the questions. Okay, you said I should analyze USD right? USD So let's look at gold here. So as you can see carefully, gold had a gap up. As you can see, there was a gap up, right? Which day was that? That was around 26 February. Today is 27. So there was a gap up. Of course, just like I've always told you, a gap up is actually pressure in that direction. So the market can actually gap up or gap down, right? So the market gaps up, then of course did what we call try to cover the gap. And I think they covered that gap up to 50% of the gap, right? Because this is the start of the gap. So this is where this is the beginning of the gap. And of course, up here is the end of the gap. So if you watch carefully, this market traded back into maybe 50% of that gap, right? So, but by just saying gap, it means pressure in that direction. And this gap is actually a gap up. So gaps on the market, on the chart, is one of the easiest trade, okay? It's one of the easiest trade. I mean, if the market gaps in any direction, then your bias, what we call directional bias, should automatically change to that direction. Take note, please. Now, if the market gaps in any direction, your bias, your trading bias, or you what we call your directional bias should actually change to that direction. It means this market gap up, right? So it means you should start looking out for opportunity to trade or to take the market upward, okay? And of course, from that gap, you can see the market has traded upward to this point, right? So simply put, the market is trying to rock another resistance here, as you can see. So let me draw this real quick. So the market is trying to rock this resistance. Then of course, it's already doing that. Okay, so this is the reason why if you are to buy, your take profit target should be now. If you want to place a take profit and stop loss, your eye should be looking at the left-hand side of the chart. Remember, left-hand side of the chart is the. Well, let me take some water here. All right, let's continue. On the left-hand side of the chart, like I said, is the past, and of course, the right-hand side is the present. So anytime you want to place or take profit and stop loss, always look at the left-hand side of the chart, okay? And you have to use the old highs and lows for your support, for your take profit and stop loss, because the market is always trying to trade above those highs and the lows. The reason why the market trade above highs and lows is because we call that a liquidity trap, okay? So liquidity, I mean money, please, whenever you hear the word liquidity, it means money, ego, kudi, owo, okay? So money is usually trapped at the highs and the lows. And guess what, sir? The market moves in the direction of where there is liquidity, okay? So where there is money. So it simply means, sir, somebody is thinking, Emmanuel, do you mean there is liquidity up here? Of course, the answer is yes, right? The answer is yes. Another question would be, Emmanuel, do you think there is liquidity up here? The answer is yes. Also, liquidity are trapped at the highs and the lows. So do you mean there is also liquidity down here? The answer is yes. So it means all of these areas I've shaded for you. There are areas where we have liquidity. So the market goes towards those liquidity. In no time, the market may just be able to trade again and trade towards this point. So in few days, few months time, the market will be targeting this liquidity. Now, by this liquidity, I mean traders have their stop losses here, right? And of course, some penny orders are here. So stop losses and penny orders are what we call liquidity, okay? Money available to be taken on the market. Even your take profit is also liquidity, okay? So liquidity should be on a topic on this own, okay? It should be a topic on this one. But going forward, the market is trying to tap this liquidity, right? So usually after tapping that liquidity, the market will now have to reverse. So the market moves in the direction of liquidities. So it means when the market was here, the market was targeting this liquidity. So it means after the market has tapped this liquidity, I can see that this market is going to reverse and trade downward. Okay, so after the market have grabbed this one, remember we have what we call trend line liquidity also. So that means along this line, we normally call trend line, right? Remember, the market has created for us a local trend line. Okay, very local because it's on a small lower time frame. Okay, so the market has created what we call a local trend line. As you can see, the market is bouncing up this area. So, and of course, stop losses and of course, spending orders will be at those these areas. So it means very soon after the market has grabbed this external liquidity, right? So this one is for external liquidity. So the market may just turn and start heading towards this trend line liquidity, right? So the market might go through all of this trend line liquidity. So I'm trying to say the market should be able to trade above this high. That's what I'm trying to say. Then afterwards, it can now turn because after targeting that liquidity issue, to have to go for the next one. Okay, you just like after your first kill, you go for the next kill, right? So if you're a hunter, after killing one, you go for the next one. Okay, you don't stay on that one, you go for the next one. So the market might be coming for this one. So after coming for this liquidity here, remember there is one up here. The market may just turn now and start targeting this one up here. Sorry. So the market may just turn and start targeting this one up here. So usually the market targets the liquidity. So from everything I've been trying to say, I'm trying to say that from up here, I'll start looking out for sell opportunities. So guys, that's what I'm trying to say. So if it was a little bit boring, but then I'm trying to say after up here, after the market has target what we have up here, target liquidity is up here, the market may just start going down. So if the market takes out this high, I'll start looking out for sell opportunities. All right, I'll start looking out for sell opportunities. So it means after the market have done its job here, I'll look out for sell opportunity. So please take note. Please take note. Please don't forget this video is also being recorded. It means maybe I'm talking very fast and you're not really following with the pace. You can get back to YouTube. You can get back to YouTube, Rally Trade on YouTube, and watch this video again and again. And then don't forget towards the end, at the end, I will drop my number. Those that endure to the end. So please don't leave. Stay to the end. I'll drop my number. So if you have challenges, you can equally reach out to me. Okay, please. You can equally get back to YouTube and watch these things again. Okay. So I'm looking out for a sell condition anywhere around there. So if the market have traded above the side, I'll look out for a sell condition. Okay. But let me give you some pending orders that you can play with. Okay. So so for today, you may want to sell if the market can trade just I think if I'm to zoom into this area, I'm already seeing what we call a fair value gap, right? So there is a gap, right? Now this gap is not the other gap that has space. Okay, so this one is a value gap. Okay, I'm already seeing the gap. So usually this market. So if this market have taken out the liquidity up there, of course we'll be expecting. Oh my God. That person. So I'll be expecting the market to start trading downward, right? So this is inverted. So this may just be a fair value gap or an inverted fair value gap. It depends on whether the market was able to take out the liquidity up there. So let me give you two scenarios. Number one, if the market is able to take out the liquidity up there, I mean, if the market is able to trade above this high, so usually while coming down, it may just trade below this fair value gap and turn it to an inverted fair value gap. Then, of course, do what we call retest of that fair value gap. Then from there, it may just start going down. That is if it has actually taken out the liquidity up here, okay? But if it has not taken out the liquidity up here, guys, take note, it may just use this level as a support, then of course start trading upward, okay? So trading is really technical, okay? So you need to understand this, okay? So we might just be having one of these two scenarios, right? Depending on if this liquidity is being trapped, if this liquidity is being taken out, right? So please, let me just give you an entry there so that I can do your USDJPY for you. You have asked for USDJPY. I would like to do that for you guys. So a sell condition will be envisaged at this price. So let me give you the price real quick. So this price, so if market can trade just below this price, 2033, guys. Traders, please listen, 2033.87. So if the market today can trade towards that level, 2033.87, that will be a sell, right? Now, and of course, stop loss will just be above this new high that has been created. Take profit will just be the opening price of the day, okay? So the opening price of the day is 20 is around this 2030, okay? So let's say you're selling somewhere here 2033, the take profit will be around this 2030. But please take note, the understanding the analysis is more important, okay? Understanding the analysis is more important. The answer of the instrument is good, please. You're saying you have gained more strategies today. Okay, that's good. That's good. Thank you very much. It means Steven, I can see you there. It means you're getting value. I'm trying to read your comments and of course take some of your questions. So much value today, not boring at all. Thank you very much. It means you guys are really following. That's good. That's good. Good to have great traders on the platform today. All right. So please, this particular section is every day. Please do well to join us tomorrow for another exciting section again. Now, please let me jump straight to USD/JPY. Okay, so you can see it is massively dumping here. I like this instrument to dump so that I can buy. So yes. I normally like to see as a trader. I normally like to see GBP/JPY dump. By dump, I mean trading to the downside. I normally like to see USD/JPY dump, right? I mean trading to the downside like this. I normally like to see CHF/JPY dump, right? So this instrument I'm calling for you are the instrument that I normally trade very well. Of course, make a whole lot of money from them. Okay, so we are already seeing another dump here, right? I normally like to see them dump, right? So whenever they are dumping like this, I normally look out for what we call area of interest, right? So usually you ask for this, honor your request. We are doing analysis on USD/JPY. I hope you're still here. Okay, so the market has actually dumped right now to what we call an area of local support, right? So local support because in recent time, the market has been testing this area, right? It has been testing the area. By test, I mean there is a whole lot of buy orders sitting around this area. So there's a whole lot of buy orders sitting around 150, okay? Around 150.290 to 150.358 USD/JPY, please. So there's a whole lot of buy orders. So the market has been testing it. So right now the market is coming to test. Remember, those buy orders are what I call liquidity, right? So they are part of the liquidity, part of external liquidity on this particular chart, okay? So I always like to see a dump. So the market is dumping again. Another area where the market will most likely dump to is to dump towards this other support area, right? So this other support area. So what I normally do is, remember we analyze USD index, right? And we saw some bullish preference, right? Bullish preference, yeah. We saw some bullish preference on USD index, right? So that means the dollar may just be strong during the later part of the day, or just like I said from the beginning, or it may just be strong maybe tomorrow or next, right? We have news on the dollar, so the dollar might just be strong later part of the day, right? So that means all of this dump, the dollar may be able to recover from this dump, okay? So if you are to trade it, right? If you're to trade it, what I normally do is you can divide your lot size into two. You enter with a smaller lot size on this area of interest, AOI, area of interest. So the market has actually reached the first area of interest. So one thing you may want to do at this area of interest, being that the market, please take note, being that the market have tested this area of interest several times. So you can see the lowest low, we call that a spring, right? The lowest low of this, all of these lows. Lowest low is here. That's a spring, right? The lowest low. So liquidity could also be trapped, external liquidity, I mean, trapped around that area. So what you may want to do is, after the market have taken that, that's where you may want to start buying, okay? So you may want to wait until the market has taken out this low, right? Taking out this low. And of course, that distance may just be, let me measure it for you. So from where the market is right now to that low, it just maybe, that's just 5 pips, right? Five 5 pips. 5 pips. So it means if the market trade anywhere below 5 pips, you may want to start buying. Okay, so let me do this for you. So that means your buy penny order will be a buy limit. So a buy limit will be around, let me call the price for you on USD JPY. Oh, 150.254. So 150.254. Remember, the market will be targeting this lows, right? So, of course, since it has gotten here several times, we are looking out for the lowest low. So if the market can trade just below that lowest low, it will be around 150.254. So 150.254, any of this area, 252, 254, we'll be looking out for a buy, right? A buy. Don't forget, guys, we're looking out for a buy if the market can trade just below that low, okay? Just below that low. Now, what you want to do is you may want to enter your, okay, let's say your lot size is 0.08. So you may want to just divide it. You enter first with 0.03, right? Don't forget, it's actually a dump, right? So you're trying to go to the opposite side. So you may want to enter with 0.03. If the market turns from there, fine and beautiful, you've been able to trade just after the market has tapped the external liquidity, okay? Then if you continue practicing that, that's how you become a very good trader, okay? But if the market does a further dump, if the market does a further dump, I mean, if the market trades down much lower, then of course, this other area of interest, then you may want to complete your lot size, okay? Because the market has reached a very strong support, we're expecting the market to reverse from there. So, guys, that will be it for USD JPY. Let me look at the comments again. Then, of course, we can go to US 100. Can we do US 100, guys? Can we do US 100, guys? US 100. But let me look at the comments and then let's see what we have there. Okay, let's just do US 100, and of course, so this analysis on US 100, yeah. Oh my God, please let me grab some water, please. All right, for this US 100, please, I said I was going to give you my number at the end, okay? So that means I expect it to stay glued, okay, to the end, so that I can give you that number. Very important. So, guys, this is US 100. Let me start from H4 time frame. Let's look at the general perspective of what the market has been doing. There has been a lot of gaps, man. These gaps are cool, man. Look at, you can imagine this gap, just like what I explained to you about gaps. Oh, gaps can be your hallelujah day. Just imagine you saw this gap, right? You saw this gap. Okay, let's go straight because it's already close to 9. Let me jump to maybe 1 hour time frame. Let's see what we have there, 1 hour time frame. So remember, this instrument will rally. I mean, this instrument will take to the upside if the dollar is weak, right? So we're already seeing it pumping upward on the 1 hour time frame, right? We're already seeing it pumping upward on the 1 hour time frame. So it means it is trying to cover up this gap, right? Now, remember, there is one thing you need to bear in mind that this instrument, US 100, is actually a basket of 100 companies trading on the floor of the New York Stock Exchange. So actually it's 100 companies. And of course, this company, most often than not, this index, US 100, moves up more than it moves down, right? Very important statement. It moves up more than it moves down. So that means that should also affect your thinking, right? It moves up more than it moves down. So if you look at how much it has been moving, let's say for the past 5 years, for the past 2 years, for the past 10 years, it has been going up, sir. It has been going up. So it means you can even do an investment here, right? You can put a whole lot of money buying it. then go and sleep, right? But most Nigerians cannot do that. Most Nigerians want to see profit that same day, that same day, that same day. If it enters the next day, oh, they are worried. Uh, all right then, guys. Time is really fast spent. So quickly, so we have seen that the market has tested a support here, right? And actually, that support was able to hold the price, right? The support was able to hold the price. Okay. So that means the demand here, the demand here is actually very strong, right? Because if you watch carefully, it did not trade below the lowest low, right? Now that's how you know whether that particular area is very, very strong, right? It did not actually trade below the lowest low, right? So look at how far it came. It did not go below the lowest low. Okay. Then, of course, this candlestick has ended as a bullish candlestick, right? So if things are ended at a bullish candlestick, then let me go back to that my USD index. So let me see what the dollar is printing for us. So remember, this was where it started from, right? So we said this area may just be able to hold the price, right? And gradually on this H4 time frame, we're already seeing some bearish preference, right? Bearish preference is, sorry, bullish preference, sorry, please. And now the lower wick, right? Or the lower tail of the candlestick is what we call bullish preference. The upper one is called bearish preference. Okay, so when you hear the word bullish preference, bearish preference, you don't understand what I mean. So we said this area may just be able to hold the price, and we're already seeing that, right? Okay, fine. So let's come back to US 100. So what we can do here, since the market has been able to test this support level, so what we can do here, we may just want to enter a buy trade, trying to target this high. Okay, so we may just want to enter a buy trade because this high will be the next target. Remember, this low is also a target because the market did not trade below this low, right? So these two are targets, right? So the first target. So now it's hard to know which one is the first target because the market did not actually trade below this low. Okay, so two things can happen here. Number one, the market can be able to tap this liquidity first, right? Two things can happen here. Tap that liquidity first before going to tap this one. Remember, it all depends on what happens to the dollar, right? So that's why I went back to check what's happening to our dollar, right? So the market may just tap this liquidity before going back, or the market may just go straight, maybe go through some kind of retracement before targeting this liquidity, guys. Okay. So these two are what the market will most likely play out. So for those of you that can actually trade this instrument, because this instrument is not for everybody, right? So if you have good funds in your account, if you have less than 100K, please, you want to do a top up so that you can trade this instrument very well. Okay. So you may want to enter a buy right now with a smaller lot size, targeting this high. So if it retraces further into this area, then you may want to if it retraces further into this area, then you may want to enter a bigger lot size. So see what I mean? You may want to do perhaps, let's say, a 0.01 there, buy, right? So that's an instant buy there. So you may want to do that, targeting this high, right? So you may want to do that, targeting this high, right? Now, and of course, if now the reason for 0.01 is if it retraces further into this area to target this one, I'll enter another lot size to cover it up. Okay. Now I'm not going to use stop loss because I'm targeting to use. I have in mind to also enter another lot size there. So guys, this is already. So guys, this is already 9, and this will be a good place to wrap it up. Thank you very much for staying with me. My number is I am Emmanuel Otogu. Emmanuel Otogu. Please, my number is 09026264507. So please, guys, thank you very much. Okay, so you might want to, we also have a WhatsApp channel. Okay, we have a WhatsApp channel. You may want to join that channel. Everybody needs to join that channel. Okay, I think this trade is already giving us profit. Let me see. Wow, so you can see it's already showing profit of 2,000 plus, right? So for those of us that enter, you may just want to start rejoicing. So guys, thank you very much. I've dropped my number for you. May the market be with you. My name is Emmanuel again. Okay. So please join us tomorrow for another one. You just made 2K. Okay, that's fine. That's fine. Please, that's fine.